Hello everyone, this is Evan here from the Trade Risk on Wednesday, May 18th with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. So we'll jump right into things today. S&P 500 SPY ETF. Today was Fed Day. Today we had the FOMC minutes out on at 2 p.m. Eastern time today, and net we ended up closing flat on the day. So let's take a look at where we came from, where we started this week, and that was right here on this bar. This was Monday's session. We had a strong start to the week. We opened basically flat on the day and just proceeded to rally all day on Monday, closed near the highs of the day. And then yesterday, we reversed all of that. We had, I believe, some Fed speakers out yesterday that were sort of warning and putting in that hawkish sort of rhetoric that the Fed might be looking at a rate hike this year sooner than expected. I think that spooked the market, and that's probably why net we didn't really move anywhere today, is because most of that perhaps was priced in yesterday. Again, all speculation. The important point to note is, we ended up closing, essentially flat on the day today, and we're still holding on to this very important, very telegraphed support. Now, the markets still look heavy on this level. You can see the 8 and 20 moving averages here. They're pretty much flattened out, but they are in bearish formation, so it just is more indicative of more choppy behavior with a bearish bias. But we have still yet to see this support really cleanly get broken. And the issue I have with this, while I am certainly position net short and lean on the bearish bias, I still worry about how telegraphed and obvious this support level looks right now to so many people. And the old saying goes, if it's obvious, then it's obviously wrong. And in markets, that's generally the case. So again, I perhaps think that there could be some more shaken dancing on this level. Maybe it just needs to get resolved with some big gap down, but it seems just unlikely. It seems too easy to just break this level intraday and then make some kind of nice, clean, measured move like everybody wants to see from this topping, head and shoulders pattern. So again, just keep an open mind. I still think the market looks like it's in a difficult spot right here. You can see it's just got so many tests on this level, and it's just clinging on there. And it almost seems like it's a matter of time. It's just a matter of how we can do it. But again, keep an open mind. 204 support, today's lows, that's the critical line in the sand. On the upside, if you were to look at the chart going in this formation, you can see with this nice tightened up kind of pennant here, triangle that we're forming in, if the market can somehow get a squeeze above 207, 207.50, all of a sudden, you have a whole different picture here, and you could get a nice pop back up and continuation higher. So just keep an open mind. The range here is pretty tight. You'd expect some type of resolve soon. So let's see how we can come into tomorrow. Let's see if we open up, after the market's had a chance to sleep on these minutes and see how the market acts in that respect. If we go to some of the other indices here, IWM, for example, go back to our first board. You can see again, you still got this kind of head and shoulders pattern drawn out here. You could arguably say that it sort of triggered yesterday, and the markets and today's action tried to get back above, this trend line right here, this neckline, if you will, and it's struggling to based on that topping tail. So again, IWM small caps at a very critical juncture here. You could see it's just where a lot of previous supply has been. So keep an eye on this. Keep an eye on the S&P 500. The Qs, same thing, getting in tight in this pattern here, where we've seen a lot of previous lows right around this 105 level. And then again, you have this trend line coming down here where if we could get a resolve above 107, then you get some nice squeeze. And again, perhaps the market needs to do some type of fake squeeze out here, shake out all the shorts that are positioned right now, and then they'll drop us, next week or the days after. That's just sort of the out-of-the-box thinking that probably needs to happen, but we'll have to take it just one day at a time. Everything there is speculation, so just keep an eye on those major levels that we just talked about. Looking at some other markets, let's go to them. TLT today getting smashed, falling from the top end of this range. You can see we came up here, tested, expected. Last Friday looked really healthy, and then Monday the rug got pulled out from underneath this market. Luckily, we were short this. We were short TLT coming into today from earlier this week. This was a very nice day for us here. Probably can fall further, maybe back to the lower end of this range here, but for now we'll have to see how this settles in. You can see you got a little bit of a push off the lows today, but still a big move for TLT, and something that probably, that type of move usually leads me to believe there's people that were just generally caught off guard there, and there's probably some more unwind to happen in the near future. So be cautious there on TLT if you're looking at alongside. As far as gold, also getting hit today as well. You can see it's failing to hold back above now this 121 level, which was the prior breakout level. So you can see it's back here to last Tuesday's lows. See how it can hold in here, but you can see it's just still it's just generally now looks pretty messy. Maybe this just is going to be hanging out in this larger pattern here that's going to morph into something, but we'll have to see what happens with gold. Silver, similar situation, although this one clearly breaking and invalidating some support right now. So the lowest close now going back since the beginning of April, or mid-April, so you just have to be a little cautious here. Perhaps silver needs to fill this big telegraphed open gap, so careful there. It looks like it's on breakdown alert for silver. USO getting beat up too. Again, all of these commodities getting pressured by the US dollar. Let's just go to that now, which saw a nice rally pop right after that FOMC, after those FOMC minutes were released. 70 basis point move higher here. You can see on the weekly time frame, looking like 3 weeks ago was just a big false breakdown. We've now mounted this level, this support level, and if we can close strongly here, then perhaps we have some successful false breakdown, which trapped some shorts, shook out the longs, and maybe we have energy to long-term rally back up into this range. So that's what's pressuring a lot of these commodities here. Oil was positive on the day for most of the day, and then it turned lower, closed on the lows. So perhaps this wants to come in, fill this gap here. Still very healthy action above the 8 and 20. So USO still looks very strong there. Natural gas continues to slide down after Monday's opening with this gap lower below this trend line here. It's basically been struggling. Another gap lower today. This one looks like it's in tough shape right now. Have to wait until see if this stabilizes. Otherwise, I think you could probably short against, reclaiming this trend line or something like that if you're interested. So UNG looks to be pretty troubled there. Now, looking at some of the individual sectors today, XLU really getting hit. You'd expect that today with rates on the rise here. This sector here, which is tied very closely to what interest rates are doing, is getting a little bit of an unwind. So this one probably something you want to stay clear of. Again, we had this big shakeout back here on the 20th and 21st of April. This looks like a pretty mirror image of it. So again, just see if you get 2 days of selling off hard, see if we can stabilize tomorrow, and maybe we have a higher low that gets put in, or just some kind of shakeout. But just keep an open mind. Again, weekly chart, you can see still healthy action up here, basing all things considered on the longer term time frame. IYR, similar comments here, coming back down to some very important support, bouncing off it a little bit. I think if you're here in the IYR, you really need to see this hold above 76 or so to stay optimistic. XLP, Staples getting hit again, coming back down to April the 22nd lows. And home builders also feeling a little bit of pressure. I'm sorry, not home builders, materials also feeling a little bit of pressure here. A lot of these names that are tied very closely to the US dollar strength is certainly under pressure today after the dollar move that we talked about earlier. Now, the benefits of today were financials. Financials saw a nice gain today, 1.75% move of XLF, the financial sector ETF, and even semis and technology actually held in there pretty well. Semis remarkably well, 1.7%, and XLK, which held positive, up 20 basis points on the day. Trying to hold on to this 42.25, 42.10 level that has been choppy support for the past few days. Now, looking at some individual names, Apple, this had a nice turnaround this week, certainly as the news came out that Mr. Warren Buffett has taken a stake in Apple, and this big support level that we were looking so closely at suddenly seems like it could have just been a big false breakdown, at least for now. 4.46% gain on Apple just this week, closing still fairly strong today, a little bit off the highs, but looking constructive here. I think if it can hold above 92.50, perhaps you have some type of bottom to work in there. Then you'll next if you can trade higher back into this $100 level, you get the open gap over here. So be interesting to see if Apple can start to catch its footing there. Again, 8 and 20, still in sort of a tough spot for bulls, but let's just see if it can continue to stabilize here off of that news. Amazon has been pulling back. It's below $700, but still closed positive today. It's had 4 days of pulling off the highs. If this is going to be a true leader going forward, if this market isn't going to break down completely, you'd expect Amazon to probably reclaim 700 pretty quick and start to lead again. So keep an eye on that. If you're interested in Amazon and you don't want this to run away from you, you want to be looking at this very closely here to see if it can start to catch its footing and put another back-to-back green day heading into tomorrow. Facebook, similar here, pulling back off those highs, coming back down to this immediate earnings day gap that it had, the support right in here, right around 117. Let's see if it can hold here. If it starts to lose today's lows, then you might have a gap fill candidate in progress. Twitter also looking not also, but on a different note, Twitter looking very vulnerable here. It's just been hanging out on the lows, and it really needs to get out of this area. It needs to break out from this trend line here. If it can start to get back above, really $15, but tighter would be $14.60 or so. Needs to get a pop and hold. Otherwise, it looks very potentially dangerous and ugly for the Twitter bulls. If it starts to lose $14, you got to be careful there as it moves to all-time lows. And then finally, Tesla had a nice pop today. I think there was an upgrade out on it, but that move was sort of faded here, although still 3%, nothing, that's still an impressive outperforming day, but it was up north of 5%, I believe, earlier in the day. So just keep this pattern on watch. Still needs a little more time. This one rolled over pretty hard, and you still see the 8 and 20 racing lower to kind of catch up with price. So let this stabilize, see what this happens. If you start to lose these lows here down around 205, it's pretty actionable short for some further downtrending price. So that's what I had on the radar today. So I hope this video helped. As always, thank you guys for watching, and I will catch you next time.